Ever wondered how a simple idea, maybe born out of frustration, can just explode, become a multi-billion-dollar thing, especially in finance, which moves so fast? We've just been digging deep into this really significant story happening right now in India's fintech world, and it's quite a story. Innovation, access, massive growth.
Yeah, we're zooming in on Groww today. That's the name buzzing right now. And specifically the news that SEBI, that's the Securities and Exchange Board of India, just gave them the nod for their IPO. What's really grabbing me isn't just the big money figures, impressive as they are. It's the journey, the whole path this represents for a new generation of investors in India.
Right.
It's like watching a startup truly come of age, hitting the public markets, and honestly, potentially changing how millions handle their money.
Okay, so let's break it down. Our goal here, for you listening, is to give you the full picture, not just what Groww is, but why this IPO is such a big deal. We want to connect those dots. So think about this, setting out to make investing genuinely simple, like truly simple for everyone. In a country like India, where finance is often felt, well, complicated, intimidating even.
Yeah, that was the big, frankly, audacious goal back in 2016. You had these four former colleagues from Flipkart, Lalit Keshrer, Harsh Jain, Neeraj Singh, Ishan Bansal, and they launched Groww. Not as some complex trading platform initially, but focused, an intuitive way to invest directly in mutual funds.
And that core idea, it seems so simple now, but it was revolutionary, wasn't it? Democratizing investing.
Absolutely. They saw this huge group of people, average Indians, who just found the traditional systems confusing, hard to get into, opaque. Their whole vision was about breaking down those barriers piece by piece. Imagine someone in a smaller town, maybe running a small business. Before, they might have relied on, local advice, maybe expensive advisors. Groww gave them direct digital access, control.
Leveling the playing field, essentially.
Exactly. And that story, that empowerment, it clearly resonated, especially, as you said, with millennials, first-time investors, and crucially, people outside the major metro areas.
And they definitely didn't just stick with mutual funds.
Oh, no. They kept adding layers. We've watched them evolve into this, comprehensive financial hub.
Right. It went from mutual funds to stocks, digital gold, fixed deposits, even loans now. Sort of a one-stop shop.
Precisely. Now, if we look at the actual data, the growth is, well, it's pretty staggering. By March 2025, they weren't just a player. They were clearly the leader in India's stockbroking space. The numbers we found show an active investor base topping 12.9 million users.
Okay, 12.9 million. And this is where it gets really interesting putting that number in context, because that figure blows past some really established names, right? Like Zerodha, which has around 8.1 million users, I believe.
That's right, 8.1 million. And Angel One, another big player, at 7.8 million.
So it's crystal clear they've tapped into something huge. They've really captured the trust of this fast-growing Indian investor class.
And the financials back that up strongly. Fiscal year 2024, their consolidated revenue hit Rs 3,145 crore.
Which is, just for perspective, over 31 billion Indian rupees. More than double the previous year's 1,435 crore.
Now, there was a reported net loss about Rs 805 crore. But, and this is key, that was mostly due to a very large one-off tax hit. Around Rs 2,440 crore, linked to that strategic move shifting their base, their domicile, to India. We can maybe touch on that later.
Oh, okay, so strip that out.
Exactly. If you look at their operational profit, it actually rose a healthy 17% to Rs 535 crore. That signals the underlying business is strong. And analysts are already forecasting, an even better performance this current fiscal year.
So impressive numbers, market leadership. What does this IPO actually mean for the market, for potential investors? The buzz isn't just noise, is it? This is shaping up to be one of India's biggest tech IPOs this year.
Definitely. They've got the regulatory go-ahead to raise up to $1 billion US, and the target valuation they're looking at is somewhere in the ballpark of $7 billion to $8 billion.
Okay, so $7-8 billion. Why so high, especially compared to others?
That's the billion-dollar question, isn't it? But if you connect it back to that performance we just discussed, it reflects that incredible growth trajectory. We're talking annual revenue jumps of 40–50%. That's classic tech companies scaling, growing revenue much faster than costs.
Right, and compared to, say, Angel One.
Angel One, which is already listed, is valued under $3 billion. Even Zerodha, a huge name, highly profitable, was estimated around $7.7 billion by Huron in 2024. So Groww is aiming high. But their argument, you could say, rests on capturing that new investor segment, young people starting their journey.
That greenfield advantage you mentioned.
Exactly. Plus their expansion into loans, fixed deposits. It suggests they're building a broader financial ecosystem, not just pure broking, that potentially justifies a higher growth premium than some peers. They're definitely playing in the big leagues now.
And they were pretty smart about the filing process too, weren't they?
Very astute, yes. They filed their DRHP, that's the draft red herring prospectus, confidentially, back in May 20th, 2025, to be precise.
Which basically lets them test the waters quietly.
Pretty much. It gives them time to sort of fine-tune the offering, gauge how investors are feeling before the big public reveal. It's a calculated move.
No wonder the big global investment banks are all keen to get involved in managing this.
Absolutely. Now, the timing of this decision to go public, it's not random. India's capital markets are incredibly active right now. Just look at 2024. The National Stock Exchange raised something like $19.5 billion through IPOs.
Wow.
And the Investment Bankers Association, they're forecasting maybe 1,000 more IPOs over the next couple of financial years.
So Groww is riding that wave, capitalizing on investor enthusiasm and India's economic momentum.
Definitely tapping into that positive sentiment. But, it's not all smooth sailing. There are always challenges.
Right, like the new SEBI regulations, the ones aimed at curbing speculative trading in F&O, futures and options.
Exactly. That's a big one. F&O trading is, well, it's a major revenue driver for most brokers, often around half their income, Groww included. And those new rules did cause a dip. We saw about a 30% drop in F&O trading volumes back in December 2024.
And did they also see a slight dip in active users recently?
Yeah.
Around April 2025?
Yes, a temporary dip. They lost about 75,000 active users that month. It shows the market can fluctuate.
So we see the amazing growth, but these F&O rules are a real hurdle. Do you think Grow's diversification really makes them, bulletproof? Or is this a bigger storm affecting everyone?
Well, bulletproof or immune is probably too strong. I mean, no one's completely isolated when there's a major sector shift like that, but they're broader, offering mutual funds, payments, soon maybe more from FISDM.
Yeah.
It does provide a significant cushion compared to a pure F&O-dependent broker.
Okay, so a buffer, not immunity.
Right. And what's really telling is their resilience, their strategic moves, like that relocation you mentioned earlier. Moving the parent company, Billion Brains Garage Ventures, from Delaware in the U.S. to Bengaluru in India. That was March 2024.
Which triggered that big tax bill we talked about.
It did. A hefty $1.34 billion tax expense. But strategically, it simplifies their structure under Indian law, makes regulatory compliance smoother, and arguably signals a deep commitment to India.
Right, it streamlines things for an Indian listing and maybe resonates better with local investors and regulators. Powerful signal, even with the cost.
Precisely. It reinforces that long-term vision and investor confidence.
And speaking of confidence, look at their backers. It's quite the list.
Yeah.
Peak XE Partners, Tiger Global, Ribbit Capital, even Satya Nadella from Microsoft invested personally, right?
Yeah. It's a who's who of top global VCs and tech leaders. Remember that $251 million round back in October 2021? That valued them at $3 billion then. And more recently, just this June, GIC Singapore's sovereign wealth fund put in another $150 million in a pre-IPO round. That's what got them to that $7 billion valuation mark.
So these big names aren't just writing checks. It's a massive vote of confidence.
Absolutely. It's a huge endorsement. They see Groww as a key player, maybe the key player, in India's wealth tech revolution. They're tapping into a market where retail investing has just exploded, quadrupled in 5 years, some estimates say.
And that trust comes back to simplifying things, doesn't it?
It really does. That seems to be their core strength.
So with all that backing, what is the secret sauce? Why does it resonate so much, especially with first-timers?
I think it boils down to that relentless focus on the new investor, particularly outside the big metros and those tier 2, tier 3 cities. The app itself is designed to be incredibly intuitive. Investing in stocks, MFs, whatever, it's just a few clicks. Seems effortless.
Oh. It's more than just simple clicks, though, isn't it? It's how they present the information.
Exactly. They've cleverly broken down complex financial ideas into these bite-sized learning modules within the app, maybe even gamified it a bit.
So it's not just simple, it's actually engaging for someone new.
Yep.
Smart design.
Very smart behavioral design. Plus all the educational content, they push out blogs, videos. It genuinely empowers people to make informed choices. It helps break down those old mental barriers that kept so many Indians away from the markets.
And the transparency helps too, I imagine. Zero commission on mutual funds, low-cost stock trading.
Definitely builds trust. And that recent acquisition you flagged earlier, buying the wealth management startup Fisdom for $150 million.
Yeah.
That shows they're looking beyond just basic broking. They want to offer more sophisticated advice and planning too, expanding the ecosystem again.
It really paints a picture not just of Groww, but of something bigger happening in India.
Absolutely. This whole story is a reflection of India's broader fintech boom, this digital renaissance. You've got over 1.2 billion internet users, a middle class that's rapidly expanding. It's fertile ground. And companies like Groww, Zerodha Upstocks, they're riding that wave using tech to make financial services accessible to millions.
And it's feeding into a hot IPO market overall. We're seeing other big names gearing up too, right? Like Zetwork, Aether Energy, PharmEasy, planning to list in 2025.
Yeah, following on from successes like Zomato and Nika a few years back, Grow's IPO could really set a new benchmark, spur even more activity.
But we should always look at the full picture. Potential headwinds exist.
Always. Those SEBI F&O restrictions we discussed, they could seriously impact revenues across the board for brokers. Some analysts are predicting maybe a 30–50% hit to industry top line in the second half of FY25.
That's significant.
It is. And then you always have global factors, economic uncertainty, geopolitical tensions that could dampen investor mood generally.
But Groww seems aware of this. The Fisdom deal, the diversification. It looks like they're actively trying to build resilience.
It certainly demonstrates forward thinking. They're trying to strengthen their position, make themselves less dependent on just those volatile trading commissions. It's crucial because, like we said, no one's totally immune.
So as they finalize everything for the listing, probably end of 2025, maybe early next fiscal year, what's the takeaway? It feels like a company focused on sustainable growth,
Yeah.
led by founders who really know operations, coming from Flipkart.
That operational DNA seems strong, and their valuation approach, aiming for $7–8 billion instead of maybe pushing hard for $10 billion, it feels pragmatic.
Maybe learning from other tech IPOs that shot up and then fell back, like Paytm or Nika.
Could be. It suggests they want long-term investors, aiming for stability after listing, not just chasing the highest possible number on day one, offering a more attractive entry point to build that solid base.
Right, so this whole deep dive, it really shows Grow's journey from a simple mutual fund app to India's biggest broker. It's a testament to tech plus vision.
Absolutely. It marks a huge new chapter, not just for Groww, but for millions of Indians now seeing investing as something genuinely accessible, a path to financial freedom, perhaps.
It really makes you think, doesn't it? If they could simplify investing like this, achieve this scale, what other complex, maybe intimidating sectors are ready for that Groww effect? You know, that radical simplification and mass accessibility. Something to ponder as we watch this fintech giant step onto the public stage.